It certainly appears that the Santa Claus rally has come to town. Welcome to this week's Fastest 4 Minutes in Finance. I'm Scott Inman. A couple of weeks ago on the Fastest 4, you may remember we talked about the Santa Claus rally. If you recall, we showed you that since 1950, December has been positive 74% of the time for the S&P 500 index, the highest probability of any month. And even more specifically, the strength of December usually comes in the second half of the month. And that has proven to be right this year, at least at the time of this recording on December 20th. Month to date, the index is up about 4.5%. This is on the heels of a November that was up almost 9%. But on this week's segment, we are taking a look at a different index, the Dow Jones Industrial Index. While the S&P 500 measures the performance of generally the 500 largest companies in the United States, the Dow is a more narrow measurement. There are only 30 companies that make up the Dow. They come from many different industries, but are known as the blue chip stocks. Companies included here are ones that have been around for a long time, like Coca-Cola, American Express, Boeing, Chevron, McDonald's, and Nike, just to name a few. Some of these companies are also included in the S&P 500, like Apple and Caterpillar. The reason we're focusing on the Dow this week is that it recently hit a record high. Our partners at LPL Research tell us it's been a fast rise lately, but a long recovery overall. If you take a look at this chart, you'll see the Dow went from correction territory to a record high in just 32 trading days. The Dow rallied 15% from its October low to its new high this month. The previous high was set on January 4th, 2022. So it took 489 trading days to top the old high. So what do we make of it? Well, here's another chart from LPL Research. This shows historical performance of the Dow over the last 100 years for the 12 months following a record high. It does filter out record highs occurring less than 3 months apart. Along the bottom are the months following the record high. On the left side of the chart are the percentage of times the Dow was positive for those time frames, going from 1 month all the way to 12. And on the right side of the chart are the returns of the Dow. The red line is the average return for those time frames, and the black line are the median returns. As you can see, the Dow has been higher 12 months after reaching a new high 71% of the time, with an average of a 12-month return of 11.1%. Every economic condition is unique, but LPL's team believes this supports their belief that the bull market is healthy and will sustain through 2024. Investors are hopeful that the Fed will cut rates next year and the economy will avoid recession. If that happens, the Santa Claus rally could be just the beginning. Thanks for watching. Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.